Hello and welcome to Sectors Up Close. I'm Peter Devlin. Today we're going to talk about investing in the semiconductor sector with Adam Phillips, the Managing Director of EP Wealth Advisors. The hype around artificial intelligence electrified the chip sector in the first half of the year. Chip stocks, as measured by the Philadelphia Semiconductor Index, jumped 46% in the year to July 10th. That was followed by a significant correction. The index is now up about 25%, only marginally outperforming the wider S&P 500. Even so, valuations remain lofty at 39 times earnings compared with 28 for the S&P. Add into the mix third quarter earnings season. So where next? Let's ask Adam Phillips of EP Wealth Advisors. Adam, thank you very much for joining us. So let's take a look at earnings season as a whole so far. What's your assessment?
Yeah, so it's early, but so far, I would say so good. Things got off to a little bit of a rocky start early last week when ASML, the Dutch machine provider manufacturer, reported some not so stellar earnings. They actually provided a pretty disappointing outlook for sales growth in 2025, and so the stock fell quite a bit. A couple days later, Taiwan Semiconductor provided a much better report, but really that couple days in between, that's a lifetime to investors, specifically those that focus on the semiconductor space. But I would say Taiwan Semiconductor really came out and reassured investors that this AI theme, this semiconductor trade is not over just yet. Taiwan Semiconductor, they provide just over 90% of advanced chip technology to the rest of the world, to companies like Apple, Broadcom, Qualcomm, NVIDIA. So the fact that they provided good earnings and a really strong forecast going forward suggests that there's still healthy demand out there.
But we do also need to factor in the serious potential trade tensions with China. Last week, Intel was singled out. That was after a Chinese industry group. They did warn of cybersecurity issues for the chip maker. So do you think that the market is taking this seriously enough, considering those high evaluations?
I don't think so. I think that for right now, the market seems to be really focused on the positives and the fact that this AI theme continues to have legs. And what we worry about is that all of these companies are subject to the potential headline risk and what comes from potential restrictions that come out of Washington, whether it's limiting semiconductor exports or sales to certain countries, or whether it's coming from other countries such as China. And so we do think that this is a real risk. And as we see valuations that and stock prices that seem to move in only one direction, that is something that we're mindful of. And the fact that just one negative headline can really surprise investors and put some downward pressure on the share prices of these companies.
So keeping with the political space as well, 2 weeks tomorrow until the US presidential election, does one candidacy look in more favor for the sector?
You know, it's interesting. We've actually seen the last few weeks as the odds for former President Trump have been rising in the polls. We've actually seen technology stocks outperform. They've been moving in line with that. Probably that sounds a little surprising to what some may have expected, that maybe he would be a little bit more hawkish towards China, a little bit more hawkish in terms of trade policy, and that might not bode well for technology or semiconductors. But we've actually seen the opposite play out. I think that either way, we're hesitant to read too much into that, and we really just want to see where the chips fall.
So let's look at the chip sector as a whole as well. 19 of the 30 stocks are up. That includes NVIDIA. We see 11 are down, with Intel as well leading the pack. How do you explain this divergence?
Yeah, I really think this is not an area that investors are just blindly allocating money. It is very clear the winners and losers here up to this point. Who is leading in terms of producing the most advanced chip technology? I think that others have been very clear that they want to compete. They need to step up their game to compete with the likes of NVIDIA. Companies like AMD are making some moves to produce more advanced chip technology and really get a larger share of this market. But ultimately, time will tell. And right now, companies like NVIDIA are really benefiting from that first mover advantage of being really the representative of the entire AI theme.
So finally, Adam, would you advise your clients to buy into this sector that's versus other sectors that you do closely watch, such as healthcare?
We would. When we don't think that the AI trade is dead. We think that the semiconductor space is one where there's a lot of growth. These companies are generally very profitable and they generate strong free cash flow. We would just highlight the fact that they've been very strong and they're unlikely to remain in this leadership position that they've experienced over the last couple of years. I'll just highlight the fact that this bull market is now 2 years old. When it started, the semiconductors they accounted for about 4.5% of the S&P 500. Today they are approaching 12%, and so I think that just speaks to their recent strength and the fact that investors need to remain diversified and look for areas that have been left behind over the last couple of years.
Adam Phillips from EP Wealth Advisors. Thank you very much for your thoughts. And that is your look at the chip sector. I'm Peter Devlin, and this is Reuters.